Last week, history was made. We saw a financial catastrophe that the history of mankind hadn't witnessed anything as such in all its time. In 45 minutes, we had more than $2.5 trillion liquidated from assets, including $1.5 trillion liquidated from gold, $1 trillion liquidated on S&P 500, and which was about 2% on it. 2 days, more than $920 fall on gold, which was approximately 15%, a historical crash that hasn't, basically it's stunning. Even saying that's crazy is very little to describe what happened. And also on Bitcoin itself, we had about more than $720 million liquidated. And guess what? We have a new head of the Federal Reserve to come, who's going to be Mr. Kevin Warsh, who hopefully is going to be making financial markets a little bit more stabilized than it is nowadays. Alright guys, speaking of the previous week, it was the most volatile week of all time in financial markets, period. So it was a little bit difficult to compel to either our analysis or anybody else's. However, we had so many good trades on day terms, whether it's long or short on gold, Euro USD, also Bitcoin. Alright, so that's speaking of myself, what I was doing. Now, let's take a look on our upcoming week's analysis on the technical part now. Fundamentally, there's still the geopolitical situation and people are still concerned about what the new head of Federal Reserve is going to do as in policies and so on. And he is saying he'll be a little bit more realistic to interest rates and monetary policy than Jerome Powell was. And that forced some optimism upon financial markets, and that's probably one of the main reasons why gold crashed as we saw. All right, so speaking of Nasdaq for the upcoming week, we still expect somewhat of volatility to come by the upcoming week, so keep an eye on whatever you're trading, on news, on technicals, and of course stick to risk management. So looking at Nasdaq, we can see that there is an inner trend inside a bigger pattern, and we can see that Nasdaq is at that supporting lower bracket of an ascending channel. However, this is on a longer frame. We can see a bigger frame. Nasdaq is forming some sort of a falling wedge, so we could actually see it going further down before it starts an attempt to go up. So that's about Nasdaq. Don't go long right here until you get a confirmation. And to back this up, we can see that that week was volatile. So we had weeks opening, it opened there, they pumped it exactly up, very fast, not instant. And we can see that went up, went down, closed about the same as opening, same as past week. So the week before it was a volatile move to the downside. Now we have a volatile move to the upside, but either ways, it's still a volatile move. So careful trading Nasdaq. That's about Nasdaq. Let's go into gold. All right, looking at gold, and probably this is what you all are excited about. Yes, it was an incredible crash in gold. That's never happened in the history of humanity, not in whatever happened in the past. What we can see here is the most volatile form on gold. There are actually multiple possibilities to happen. We have a very solid rejection from this level, which is a very strong support, making sense that we saw that reversal, especially because weekend also is to come, and it was the closure of markets. So from here, we can expect a retracement to the upside. However, it is very strong bearish currently, and it retraced from this trend line. Technically, a very probable scenario to happen is we could see some sort of retracement to the upside before a break below this trend line and markets going a further down to about 4,500s. So this is what should happen in gold if things don't escalate globally, as in geopoliticals. That's what we should see. Otherwise, it could just pump up, because If you think about it, back in 2022, we had $60 in impulsive jump in gold because of the situation between Ukraine and Russia. It was incredibly strong, pushing gold upwards because of the tension and all that war starting. And right now, you can see gold jumping about $300 in a day for no solid reasons but panic, right? So, markets are volatile, keeping it in a professional term. Be very careful when you trade, and good luck for all of you guys. That's about gold. Let's go into another asset, which is going to be Euro USD. Right, looking at Euro USD, we can clearly see that dollar gained some strength, pushing the Euro USD to the downside. Well, technically, we did have a descending triangle pattern here at support. We had multiple areas to enter, and yeah, it was a good trade to short. So right now it is at support, which is the target. Now, if we look at DXY is forming somewhat of a falling channel after an impulsive movement, which is a very good bullish indication. So technically it shows strength in basically the bullish side, and the optimism about the new head of Federal Reserve also could give that strength to the dollar, which can support the idea that Euro USD could actually further fall and break below this support. So what optimally you want to see is a retracement to the resistance and a break to fill this fair value gap, which is very small but still a gap, and possibly also come all the way to the support level. So that's a very high probable scenario for Euro USD. However, if tension escalates, we will see weakness on the dollar, and this should cause it to consolidate rather than go up skyrocketing or fall down. Because if tension happens, the dollar will be weaker. And even if we look at the DXY chart, there is still some room for a push further down, even though it is at a very good support and a bullish pattern. That's about Euro USD. Let's go into Bitcoin. All right, looking at Bitcoin, yes, we did have some bullish optimism upon Bitcoin, but it seems that because of volatility, people are dumping Bitcoin. And this has actually historically happened every other time. However, speaking of Bitcoin itself, even though we had more than 720, it was I think 740 something million dollars liquidated from it, causing all this crash. Now it's more likely to further go down, I would say, on basically a month or two. However, because of gold being insanely actually volatile for a good period of time, and because of central bank digitalizing currencies and the dollar basically getting all this pressure upon it, Bitcoin seemed like a good asset to be as a tradable asset alongside gold. However, people still felt about it the same way they felt, which is basically what happens most of the time. History keeps repeating itself. All right, so from here we see that it broke below the trend line and it fell to about $81,000 per Bitcoin, creating for us a very strong fair value gap. So here is a very solid support. It was broken, right? So from here we see strong indications for the upside. So what I'm expecting, or I can see, right, Bitcoin is creating for us some sort of a downtrend here. And we could see a little bit of consolidation, then a possible movement to the upside where it traces this resistance, fills this fair value gap. And guys, this resistance is actually pretty solid because we have a lot of liquidity below it when it broke down. So it became a solid resistance. So this should give Bitcoin an optimal shape for a continuation to the downside. And if market fell to this or basically operates the same way I'm expecting, or basically analyzing, not necessarily expecting, we always are flexible with what happens in markets and what we should react to market behaviors. All right, so that's about Bitcoin. Yes, it could fall to 75,000, 76,000 as a next target. Right, that's about Bitcoin. Let's go into Nifty 50. Looking at Nifty 50. So Nifty 50 is practically the only asset that compelled pretty well to technical analysis so far, because it's basically in the Indian market. It's not really related to what's going on in the US, in Ukraine, Russia, all of that. Of course, there is a lot of connection, but still. So we can see that it moved from support to the upside. We are still expecting a continuation for a movement up for markets to go to that resistance, and then another attempt to break below this support. So that's about Nifty 50 from the technical part. I'm going to leave Mr. Medium from London to speak about the fundamentals. Pretty exciting stuff, isn't it, Mr. Medium?
Thank you, Samer, for sharing your insightful analysis on the technical side. Here is Amir Amidian, Master of Finance student in UK and also financial market analyst at Xylus. Donald Trump kicked Jerome Powell out of the Federal Reserve and Kevin Warsh took the place. By the way, tensions have been accelerated at the Middle East to the highest level since 3 years ago as more warships are coming to the Persian Gulf. Let's have a look. Hello everyone, welcome back to another weekly market update. Last week was bombarded with the different news and events, and financial markets faced a huge volatility last week. Let's dive into it. After 8 years, Jerome Powell's tenure at the Federal Reserve officially ended last week. The FOMC decided to leave the interest rates unchanged. In his final press conference, Powell pointed to a stable long-term and short-term inflation expectations, which have been softening continuously in the past 2 years. Overall, the economy remains in a good shape, while the labor market is showing early and gradual signs of cooling. It was a part of his press conference. Donald Trump nominated Federal Reserve critic Kevin Warsh to run the US Central Bank. Financial markets reacted massively to this selection as gold dropped over 10% on Friday and dollar showed some signs of pullback because of his hawkish approach for the monetary policy. From the inflation side, December PPI, or best say producer price index for the United States, released higher than the market expectations and estimates as the core PPI on annual basis reached to 3.3%, which is an absolute big alarm for the Fed as inflation is still elevated somewhere. From the Canada, Bank of Canada, or best say BOC, determined to keep the interest rate unchanged at 2.25% last week. Governor Tiff Macklem flagged elevated uncertainty around the US trade policy and economic risks, making future rate moves unpredictable. The Bank of Canada projects modest growth with inflation near its 2% target, but emphasized that outcomes depend on evolving global conditions. From Australia's CPI surprised to the upside, with annual inflation rising to 3.8%, driven mainly by housing and food costs. The data reinforces that inflation remains sticky, keeping pressure on the RBA, or let's say Reserve Bank of Australia, to stay hawkish on rates. From the geopolitical side, Donald Trump sent more warships to the Persian Gulf, and it looked like a massive attack to Iran is not out of expectations. Meanwhile, European Union announced Iran IRGS as a terrorist organization and put some heavy sanction on Iran's leader and this organization. From the other side, Iran IRGS has started some military exercises around the Hormuz Strait by its navy forces. Altogether is signaling an accelerated tensions at the region, which may increase the risk averse of the market participants. From the corporate earnings, 3 out of 7 magnificent firms released their earnings last week. Microsoft was the first one. Microsoft delivered solid fourth quarter earnings and revenue, but shares tumbled as lower cloud growth and heavy AI spending weighted on the investors' sentiment. Meta Platform was the second one by beating the expectations, reporting a strong revenue growth and driven by ads and AI momentum, lifting its stock price sharply. The third one is Tesla. Tesla posted mixed results with modest revenue pressure in its core auto segment. Elon Musk said Tesla will drop producing its S and X model and its shift to making robots. Last but not least, IBM earnings top forecasts. with solid revenue and EPS growth, sending its shares higher on a strength in software and AI related segments. Let's have a look to the upcoming week. For the upcoming week, the main concentration will be on RBA or Reserve Bank of Australia plus the Bank of England, as both of them are going to decide whether to cut the rates or hold them for the upcoming week. Also, we are going to get some economic indicators such as PMI from the ISM Institute for the United States for the manufacturing aspect, and also some other economic indicators related to the labor market such as job opening numbers, ADP, and NFP as well, eventually at the end of the week on Friday. From the corporate earnings, next week is packed with the different earnings by different firms such as Walt Disney, Palantir, PayPal, AMD, Uber, Google Alphabet, Lilly, and Amazon. Stay tuned with Xylostar. See you next week.
Thank you guys for the insights. Thank you for watching us. Stay tuned for fresh drops.
Don't forget to like, share, and comment. If you'd like to know about a certain thing, leave it in the comment section below. We'll get back to you on it, hopefully.